So yeah, thank you everybody who's still here for sticking out and joining us for this conversation. I think some of you in the audience know I'm a big nerd for agriculture, so I'm really excited for this. So I hope you're ready to dive in. By way of introduction, we'll just go down the line and I'll actually let all of our panelists introduce themselves, tell us who you are, who you're working for, and give us a bit of a taste, just 2 or 3 minutes, why you're interested in agriculture and climate together in this space. So Winfred, we'll start with you just on my right here.
Hi everyone, my name is Winfred Kinothia. I'm happy to be here, and lucky for me, my colleague just introduced who I work for. So I'm part of the team managing the MasterCard Foundation Fund for Resilience and Prosperity. And I'm here just to speak about why we feel climate is important when we're discussing agriculture. Because for a sector that is so pivotal to the economic development of the continent, and one that is so susceptible to climate change, I feel the two conversations have to be had at the same time. So I'll stop at that for now and let the introductions continue.
Hi, nice to be here. Thank you for having us. My name is Nijad Jamal. I'm the managing partner of a venture capital firm called Equator. We specifically focus on climate tech ventures in sub-Saharan Africa, so invest across agriculture and ag tech, energy and mobility. And we're specifically focused at the seed and Series A stage, investing equity into tech-enabled ventures or ventures that are bringing technology and innovation to the region. And I guess, so our team is based in East and West Africa, also with touch points in Europe and the US. And a lot of our focus is on thinking about how to bridge technology and innovation that we see in different emerging markets and different global markets with the market need and the opportunity actually in sub-Saharan Africa. Thanks.
Hi, thanks a lot for being with us. I'm Philippe Guichandu. I'm the General Secretary of the Foundation Grameen Crédit Agricole. So it's a foundation that was set up 16 years ago with a bank, Crédit Agricole, which is one of the largest banks, not only in France, but also in the world, and the Grameen Trust with Professor Mohamed Yunus, who is a member of the board of the foundation. So we've been mainly supporting, originally our focus has been a lot on microfinance institutions. So we've been supporting altogether more than 100 institutions, not only in Africa, but also in Asia, Central Asia, Middle East, and Central Europe. But we also work in the field of, we've been supporting agri-SME company. The DNA of the foundation is on one side, you have the Grameen Trust that has been a very strong focus on women empowerment, and the Crédit Agricole, which was a bank that originally was set up to support French farmers in France. So we do have a strong focus also on rural area economy and agriculture. And I think that if you look at least our partners, I mean, it's clear that, I mean, the ones that are working in the agricultural field, I mean, they really start to feel very strongly all the issues of climate. So I think that as an investors, I think we cannot, I mean, it's there. I mean, unfortunately, I would say climate impact is there every day and more. And I think that it's really a way now where we, in our new strategy, I mean, we really wanted to help our partners to face climate change risks. So it's part of our strong strategy to see how we can, on a global partnership approach, do more in helping them to mitigate, but more than that, maybe work more on the adaptations and resilience.
Good afternoon. My name is Nick Jackson. I'm the Managing Director at the Royal Eswatini Sugar Corporation. We are based in the wonderful Kingdom of Eswatini, bordered on 3 sides by South Africa and on the eastern side by Mozambique, just across from Maputo. So we're a listed company. We have 2 sugar mills, produce 500,000 tons of sugar. We take the molasses and turn it into ethanol. We package sugar. So we do all of that. We've got 24,000 hectares of our own cane and 11,000 hectares of outgrow cane that comes in. And I think when we get to the challenges, I'll talk about exactly why I'm here.
All right. So good afternoon. My name is Madeline. I'm based in Nairobi, Kenya, co-founder at Adapter. Adapter is an ag-tech company which is also placing funds in financial institutions because we are looking to drive capital back to agri. And just as you see, other rooms dealing with energy, and infrastructure are full. I'm looking forward to a time, this is my third time at AFSIC, I'm looking forward to a time when the agri rooms will be full of people, because it also reflects how capital is treating agriculture. 5% of portfolio in banks in Africa, the region I represent, is the only lending that's done to farmers and for primary production. So bankers want to lend up the value chain, I was a banker for 29 years, so I know this all too well. And by the time I left banking, I was quite senior enough to build policies and processes and products that support the sector, because I'm also a farmer, a sugarcane farmer, and other value chains. And I wouldn't even lend to myself because it's a high cost to serve sector. And it ends up in stressed management. All the time you're just visiting farms or sending officers who hardly understand why they are there. And then about 20% of this book goes into non-performing loans, and that's an average. So who are we working with? SACCOs, some of whom are partners in this room. And SACCOs are credit unions which really understand the farmer. I was in tier 1 banks, so I know conventional, if you're in the banking industry, forgive me, but conventional finance sometimes may take long before they catch up. So I'm placing money and ag-tech risk scoring tools inside credit societies, inside SACCOs, so that farmers, we mitigate the loss, and we also put a risk-sharing bucket of pool of funds that they can scoop from just in case there's still bad loans happening, despite our intervention. So we also at Adapter do capacity building for farmers, technical assistance for the institution itself.
Great, thank you all for the introductions. And I think the first question I want to touch on is the challenges that we're facing, right? I think everybody on this panel is excited about agriculture, and if you're in this room, as Madeline pointed out, you must be excited because it's a specific topic at this conference. But underlying even the title of this panel about attracting finance to this sector is that it's a challenge. So maybe we can just go in reverse order, because Madeline, you started to touch on it. What are the challenges that you face in attracting capital to a sector you know is important and viable?
All right, so apart from what I've mentioned, the high cost to serve, it is a sector that needs real data insights, and that has been presented to farmers. So it's been presented to farmers who are loaded with this information, a lot of good startups and technology companies which keep driving a lot of solutions to farmers. But a farmer undercapitalized will do nothing with this. They'll just have good knowledge, attend functions, get paid some little per diem for being out there, get a good lunch in a nice hotel, and then go right back to the village without knowing then what do I do, because the banker is not attracted to the farmer. So the big challenge here is how do we create some language in between or inside the vacuum that exists between data and finance, So there's data on one hand and capital on the other. So in between there's a vacuum which is occupied by a farmer who really needs the money. So I think, in my view, with data evaluation and insights, creating platforms through AI, because we're also using AI, so that the farmer is able to go to the bank with a score. And the banker themselves also have a platform that can score a farm. And then we kind of bridge that, big chasm, so that the banker also understands what's going on at the farm, what are not the imagined risks, but the actual risks that exist. And I'll talk just a little bit about what I mean, to put it into reality. So using the Adapter climate scoring tool, you key in the crop and you key in the location of the farm, latitude, longitude. And for every 2.5 kilometer radius, you're getting exact risk metrics for climate, water, soil, and biodiversity risks. And under each of these pillars, these are fed by indexes. And why are we doing this? To just sort that challenge, because capital may never address this sector, and all of us ate lunch. So, you start wondering, so what's happening in the future? Because climate change is affecting productivity. Like all the tea regions in Kenya have now started registering a decline of 25% compared to some years ago, 10 years ago. And that's going to get worse in 50 years as climate events worsen. So under each of these pillars, climate, soil, water, and biodiversity, are indexes about top soil fertility, soil carbon content, soil pH, nutrient capacity, and the soil's ability, according to soil particles, the ability of the soil to hold together nutrients and pass that to the roots of the plant, and therefore what's the optimal plant that will do well in that region. Okay, so I think one of the ways to solve the challenges is, can we even, at least in agriculture, advise that apart from appraising a farmer as an entity, you know, what's your age, do you have market, do you know your cash flows, do you have offtake? But how about the farm? The crop also has a language. The livestock too, because we also score livestock risk. You know, is the livestock also really optimized in terms of yield capacity? And the last thing I'll mention is we have a challenge where, let's say in the agri sector, in the livestock chain, whether beef or dairy, farmers are getting loans to add more, you know, more cattle to widen their herd. That's not necessarily the answer. What we need to do is really mitigate against emissions and make sure that the existent herd, or even a lesser number, is optimized to produce the biggest yield they can if the cattle is able to adapt to climate change. So that challenge exists, and I think only data can sort it, in my view.
So I'm hearing a big information gap across all activities, and maybe even technical assistance goes along with that for the farmer and the training, adding to what they already get. Maybe Nijad, you can comment as well as an investor if those are similar challenges that you face, and then we'll go to our two foundation representatives.
No, absolutely. Well, Madeleine sort of talked, I think you talked very much grassroots challenges, right? I mean, how are banks getting loans and capital into the hands of smallholder farmers? How can that be data enabled? I may almost take the complete other end of the spectrum, which is a very top-down perspective, saying, how are venture capitalists, how is private equity, how are the infrastructure investors, how are the development finance institutions looking at the challenges of this space? They're the ones providing the capital to the banks, they're the ones providing the capital to some of these on-lending institutions. I mean, and ultimately, I think we see, you know, three fundamental challenges across the space. The first is a capital challenge in agriculture, because agriculture, unlike other sectors, can be an asset-intensive, capital-intensive type of business. You need working capital for inventory. You need asset finance for machinery. You need input finance if you're thinking about inputs. You need credit. There's a whole range of different types of capital uses which go beyond just equity. I mean, it's equity, it's debt, it's often grants, it's technical assistance. And so that mix and that blend of capital is critical in the agri sector, unlike maybe in fintech or e-commerce or other sectors. The second challenge fundamentally in ag, I think, is one, unfortunately, that's still the case, is a question of economics. Yes, the market is big, but the addressable market is not as big. The willingness to pay exists from end customers, but the ability to pay often doesn't. And I think that has been a pervasive challenge across the ag space. You know, finding projects, finding companies that are financeable, where the returns make sense, where the timelines make sense, and where the risk-adjusted returns make sense. And then finally, this question of scale. Most of the agribusinesses that we look at, or ag tech companies that we look at, are operationally intensive. There's real hands-on brick and mortar type of operations. To get to certain scale, you have to actually think about operating across markets, which are not so easily integrated. And so that very hands-on path to scale, I think, creates a barrier to entry for investors to come in and just sort of, you know, plow money into the space. We can talk about the solutions, whether they're capital or sort of the hands-on support or the value-add services that are required to help these companies through their journey. But I think that's something we'll talk about over the next
Yeah, for sure. And I can see the connection you're even saying between the, you know, how intense it is on an operational level and all the details you just mentioned, Madeleine. And I'm curious too, before we get onto the solutions, because we have, you know, representative from the MasterCard Foundation, another foundation. Do you guys see a similar set of challenges as more grant-oriented institutions, Winfred?
So yeah, I think what you've mentioned is what I would have as, just to summarize the challenges, and I think also Madeleine, what you've covered. So the three that I would identify, and I think you've already covered, would be, of course, the unavailability of quote-unquote sustainable projects, or projects that funders or financiers look at as sustainable. I would also point out the weak policies that we have surrounding agriculture as one of the things that also deter the flow of private investment into the sector. And I would also point out the technical capacity gaps that we have within the sector, especially when you start looking at it from a climate perspective. I feel like we still need a lot of technical assistance to come in and support the growth of climate-smart agriculture in the continent. And I think, as I said at the start of this conversation, we can't speak about having agriculture flourish without addressing the challenges that we have that are coming from a climate perspective. So those are the three that I would summarize. And maybe just to, I don't know, how, could we go to the solutions or first we?
If you're eager to jump ahead, you can give us a little bit of a solution.
Just a
Go
little
for
bit
it.
of the solutions. And just to also speak about the fund as well. So the Fund for Resilience and Prosperity, the way it's structured is that to address these three sets of challenges, we have the first one in terms of us not being able to have, I don't know whether it's a real risk or it's a perceived risk that we don't have a pipeline of projects that have at least a proof of concept to be able to attract funding. So to be able to to solve for that, that's why we have grant funding existing. And when you look at grant funding, it is in of itself patient capital, and it comes into the sector and de-risks it. That way we are able to have a proof of concept, have what we call a going concern that has already been proved, and then the hope is that at this point then we are able to now attract private investment into the sector. And for the Fund for Resilience and Prosperity, apart from us having grants coming to the SMEs that we are supporting in the agribusiness space as well as in the climate impact space, we are also having an intervention which we are calling Connect. And Connect is where we bring together our grant recipients, bring together these other financiers, your banks, your PE, concessional loans, and we have discussions of we've given this grant recipient this amount of grant, this is what they're doing, and maybe from that interaction they can be able to gain additional capital and be able to be sustainable. So to solve for that aspect of this notion that the programs, the projects in agriculture are not sustainable, especially in climate smart agriculture, we have that Connect intervention. We also have, on top of the grant, we have an aspect we are calling technical assistance, whereby this now solves for what we are saying in terms of this notion that we don't have the technical skills to be able to profitably run proper climate smart agriculture businesses. And for our technical assistance, it's both demand-led and supply-led. So once we have our pipeline of grant recipients on board, the idea is to ensure that they are fully supported and they get the skills they need to get so that at the end of the day, you have businesses that are sustainable in the business, that are running, and of course and these are SMEs, so they are for-profit organizations that can just stand on their own ground at the end of the day. To solve for the weak policies, what we are saying in terms of we have weak policies around the field, and it is true. I feel like I'm Kenyan, so from a Kenyan perspective, we do have very well-written policies that for some reason are never quite implemented. So as part of the Fund for Resilience and Prosperity, we do have another intervention that is called convening and influencing, whereby the idea is to bring together all stakeholders, that is the grant recipients, the other stakeholders in this space into a room and have conversations that can hopefully lead to systemic change. And all these interventions are coming together to ensure that these SMEs actually grow and are able to create jobs for the young women. So the goal of this program is to ensure that we have jobs created for financially disadvantaged youth, but with a focus on young women. So those are the solutions I would see to solve for the three problems that I had highlighted.
Okay, Winfred, you don't sound very busy at all. But Philippe, do you see your foundation with Credit Agricole playing a similar role? When you look at the landscape, do you see a similar set of problems with patient capital and technical assistance and the need for grants to come in and de-risk? Is that kind of the same approach that you guys take, or what's your perspective as a foundation?
Well, I just want to mention that we are a foundation, but we mainly do investment in the sense of through debt, a little bit of equity and guarantee. And we also provide some TA. So I think it's important because usually when you talk about foundation, you only talk about grants, which is not our case in many businesses. On our side, I think I really wanted to come back to what has been said regarding data, because I think that one of the big challenges I think we do have is data at two levels. First is to really understand what has been really, or what is really the impact on the climate, on the agriculture, farmers, and so on, and how the SME are able to have the right analysis and the right understanding about what is happening. And then data collection is also very important in terms of measuring the impact. Because when you want to attract impact funders, at the end they will ask you, okay, and so what will be the impact? How are you going to reach the farmers? What will be the new type of agro-businesses that they will implement, whatever. So I think that data collection is an issue, and that's where I think that a lot of new high-tech, fintech and so on can help a lot. I think that on our side, of course, the issues of de-risking the investment is key when you talk with, and when you want to attract funders, and when you have to prove that, I mean, of course, it remains risky. So first, I think the first thing that you have to be clear, I mean, that if you invest in agriculture and if you want to invest in climate, more specifically on these issues of climate, the risk is there, and things will not reduce, unfortunately, because we know that the climate shocks are bigger and bigger. So it's the capacity you have to try to find solution to de-risk your investment. And that way, I think that's where definitely there was other people have been discussing a lot about all this blended approach, where you combine not only investment, you combine also TA support, you combine guarantees, you combine different type of services and so on. And I think that working on climate is working on innovation. We have to find new ideas. We have to find new ways to look at the problem. And innovation is key, but at the same time, it has a cost. And I think that the cost of innovation has to go through grants, has to go to subsidy or TA support. And our approach to TA is not only consulting. I think that TA should be able to help the companies to start new things, to make mistakes. I think that TA could help also, or a kind of, I'm really advocating for finding grants of kind of philanthropic grants and so on that help you to challenge you and to make some losses, because I think that you learn a lot from the mistake you do, or you learn a lot from what you try to do. So at the foundation, we try to accept this part of the risk and try to be sure that, of course, there is a return at the end, but that's a long-term return. And you were mentioning this word of patient capital. I think that if you work in agri sectors and on the climate, you need to have this patient view that things will not happen right away. We've been working quite a lot at the foundation, for example, on agri-macro insurance. And we know that agri-macro-insurance is one of the tools that could help small older farmers and to try to fight all the issues with climate. But we know also that a purely business case on agri-macro-insurance is almost impossible to find. I mean, we have invested in an SME company in Kenya that is working on this field, and I think we need to be a very, very patient capital. But I think that it's this long-term view that could help to find solutions. If you don't have this long-term view, and if you don't have this capacity to have different tools with you to support them with different type of approaches and take the risk, then it will not work. So it's not easy. It's not easy to convince. It's not easy to say that, okay, your expected return will not be that high. When you talk about patient capital, you cannot expect a return on your investment of 10, 15%. I mean, when we talk with some impact investors that are looking for this type of return, we said, okay, so it's not for that. I mean, you have to understand that the risk is there, and you have to understand that at the same time, what is more important, I mean, at least what we believe, which is more important, is the impact at the level of the farmers. And that's what should make a difference.
Yeah, no, thanks for that perspective, because I think what I'm hearing from the last four of you is that starting with you, Madeleine, is that operationally, farming is complex. If you want to do it well, it's very complex. And it sounds like the solutions from the three of you is the financial solutions have to be complex to match that, right? And it's not necessarily a bad thing to be complex and have an integrated approach. And so Nick, as the corporation on the panel, as the business on the panel, does this match with what you see from a business perspective in terms of the challenges that you face?
Yeah, I think I'm the guy these people struggle to lend money to. So,
So I'm glad we got you all here.
So my problem is, there's two problems. First, the first problem comes because of power. So Eswatini gets its power from South Africa, and if you live in South Africa, the power in South Africa is not great. Lots of load shedding, and we're the single biggest electricity customer within the country. So we're looking now at how do we get off the grid, how do we get away from Eskom and coal-based power, which is the important thing. How do we get off that? So we're looking at biomass generation to take ourselves off the grid. We then looked at, okay, how are we going to do that and how can we get the price down? So now we're looking at blending wind, solar, and biomass. In looking at the project and the feasibility, we said, but hold on a minute, if we're going to produce, say, 50 megawatts for us, for a small incremental cost, we can put 50 megawatts back into the grid and provide power back into the country rather than the country then buy it in coal-based power from South Africa. So now we're looking at that. So the challenge then is that to try and get the government to think about not just biomass, but how can we blend it, how can we put it together. We're then looking at our sugar mills, which are old sugar mills. They're built in 1955 and 1978. So back then, sugar mills were built to be absolutely inefficient and get rid of bagasse, so you didn't have a pile. So it's just an energy sink. So we've got to spend money to revamp it, to get it ready. So we're doing all of that, and we're looking to convert 2 mills into 1 mill so that we become super efficient. We're already top 20 lowest cost producer in the world. So we're already a very good producer, so we're going to get even better. And the technology we use, we have GPS-guided drip irrigation. So we're the biggest drip irrigated sugarcane farm in the world. We use satellite machine learning for crop identification for when's the best time to harvest the field. So, and we run our business on SAP. So we've got every bit of data you can possibly imagine that we can pull out. So putting all this together now I need $350 million to make this happen. So this is now where the problem comes. So now where do I get $350 million from? So this is where now we start talking, and then the risks come in, and can you give us this, can you give us that? There's lots of free money available. That's very difficult to get because there's a huge list of stuff that you must comply to, that there's always something that you miss at the bottom. Aha, no, you didn't read this bit here. So for us, it's a bit like chasing smoke, some of this stuff. But I think in the end, it's a renewable energy project, and I think it's a good project. And we've done a pre-feas. It works. We're in the full feasibility now to bankable, which I hope to be done by June of next year. So we're here. I'm here looking for $350 million. So if you've got it, let me know. So.
I appreciate your clear ask for your specific situation. So, but it sounds like underlying that response is sometimes when investing in agriculture, looking at these projects, one of the challenges is also some fundamental infrastructure questions, right? If we want to be able to collect data well, we need to be able to have the IT infrastructure to do so, or have the processing equipment to make it happen. Is that something that you look at too, Madeleine, when you're speaking with these cooperatives? Are you investing?
Yeah.
What specifically does it include? Infrastructure enhancements for the community as well, or more just on farm investments?
Yeah, I think, and as you speak, I even think about post-harvest as well. Yeah. How does that get supported? Because we can get great at production and great at financing, and here is product, but even infrastructure, in the road systems, if they're not good enough, the product goes bad. So, and I keep thinking, of course, PPP, there's a mile that governments have to travel, because Adapter can build roads. I know Roy Eswatini, when he gets the money, he can create enough roads into where he needs to go possibly. But that is only as far as private sector can go. So where does the government come in? And at the Kenya Investment Summit, when we were speaking, I was just thinking about government ought to be here. I mean, this is second or third year I'm speaking there, and it can't be watching at the back. You know, there's always that place which they have to play, you know, when you think about the power grid as well. But anyway, so let's talk about what we can control. I think post-harvest mechanisms are also very critical. And I think about a maize farmer who, when they harvest, if they keep this in hermetic bags, they can actually time the seasons and sell off glut period, you know. If, for example, bananas are stored in a certain way, they can actually get to market not at a throwaway price, but because the movement is controlled, they can actually fetch the right price. So that's a whole, I think, area that we are also looking at Adapter, and also creating a post-landing satellite-based monitoring platform, so that we also look at what activities are taking place on the farm after that. And you don't need to visit the farm. Again, on desktop, able to get a report satellite-based and actually, you know, down to very high resolution to tell that indeed they have built the right sheds, for example, to store, you know, to store product that needs ARE, you know, just ARE storage. The other thing I think about in terms of infrastructural support is the policies that support, you know, and this is now from, I think, the bigger picture now, you know, thinking about what policies support production, you know. I know, like in my country, there's a big drive for fertilizer, and they have tried to really ease the tax on that. But is that really the solution? You know, there's so much more else that needs to come into this sector. And I think as my colleagues were talking, I see the need for bigger collaboration so that parties who are addressing one area come together with parties addressing the other. Because I may not necessarily be able to address markets and other aspects which another institution is able to. So there's need for that coming together and collaborating. But maybe my panel mates can add something.
Yeah, for sure. Nishi looks at you.
Yeah, I mean, in a strange way, this conversation almost leads you to say, how do you drive capital and climate investment into agri or the agriculture space? It's almost not to be investing purely in agriculture, right? I think the point here is the intersection between agriculture and logistics, right? So how do you think about getting produce to market? How do you think about cold chain, supply chain logistics, or from farm to market, reducing post-harvest losses? Like, there is an element of a logistics play here within the agri space. You talk about intersection with energy. You need to power what you're doing. It's biomass gasification. Someone else is doing irrigation kits, and it's solar-powered irrigation kits. And so there is an intersection between energy and ag. You think about water security, there's an overlap again with water and agriculture spaces. You think about financial technologies. I mean, how many businesses that we look at are actually in the agri space, but that's actually the end customer. They're actually financial technology players providing credits or financing for inputs or microinsurance, or beginning to now think about, well, you know, if you're replacing coal-powered sources or diesel pumps, you're actually able to monetize carbon credits. Carbon credits can come and help with affordability. There's other ways to think about financing in a creative way. And so almost it feels like the trick about investing in the agri space is to look at the intersection of agri and fintech or energy or clean energy or mobility or, you know, water, and to think about putting those dots together.
So is that something you find that you have to explain to investors in your fund, is to say agriculture is not just one smallholder farmer in a remote location? Is that the perception? Is that something you have to explain explicitly?
Yeah, I mean, 100%. And in fact, many of the companies we've invested in are doing exactly that. It's credit for inputs plus, you know, insights plus market access for, you know, sort of an ag tech play, or solar-powered drip irrigation with innovations on carbon finance, or it's satellite imagery for parametric insurance for smallholder farmers looking at weather-related risks or events. So thinking about businesses that can be economically viable, that can scale, that's not just saying, you know, we're looking at the dollar a day smallholder farmer, because who is ultimately paying for these goods and services? It's not the end farmer, it's actually other intermediaries in the value chain.
Yeah, I mean, Philippe, is this something similar that you've encountered? I know you were saying the importance of investing in innovation. and taking that risk and being willing to take the loss. Is it also something you've had to explain to say that this innovation is more than just a traditional form of agriculture that you might see? And maybe you have some examples of some of the innovations that you've even invested in.
We try to invest.
We try.
No, and I'm thinking, for example, I mean, because you mentioned it a little bit about what we try to do with some of our partners in terms of biogas, you know, and where we realize that, I mean, it's of course very, it could be very useful. It has a lot of impact, but it's quite complex in the way you help farmers to get access to it and how you finance it, because what is available in the market is not adapted. So it's usually a type of loan that will be for what they call agricultural loan, which is for a short period of time. It's not something that, I mean, and usually, I mean, if you want to talk, and if we talk about biogas digester, I mean, it's usually at least for 2 years, 18 months, 24 months length. That would be if you help, if you really can help the people to use it. And most of the time, this type of product is not available. So what is very important here is the capacity you have yourself, for example, as an investor, to be able also to propose long-term, for example, debt loan. I mean, usually at the foundation, we used to have debt loans which are for around 3 years. But now we realize that if we wanted to support this type of activities, it should be much longer, with much longer grace period. So then, of course, when you go to talk with investors as well, you have to explain to them that, okay, the type of traditional tools that you are using needs to be adapted and needs to be also, adapted. And another issue is, of course, in terms of cost, and that's where what we try to do now more and more at the foundation is that we work with our partners, and that's why I wanted to mention the issues of data, where we provide what we call, I mean, they have different names, but it's a sustainable link loan, where, I mean, the loans we provide is linked to specific KPIs, and then if you reach the KPIs, then of course you have a reduction in the interest rate you charge, or you get access to non-financial services, TA support, and so on. And that's where, I mean, I think it's a way also to have a joint discussion about what you want to do, the way you want to do it, and how you want to reach the objective you have set up together. And of course, we know that, I mean, agriculture in terms of financing is usually it's a big issue because of the cost, and because the revenue from agriculture is really not as high, or quite could vary a lot. So you have also to be able to adapt the pricing of your product. And so you have to, when you talk to your own funders, to explain to them, I mean, why, I mean, your pricing will be a little bit less compared to what you have, and why, for example, if you work with sustainability linked loan, I mean, you are able to have maybe a better, maybe not a better impact, but at least you have a better monitoring about the impact of you do and the way you do it, and you can better explain, because you have a real dialogue with your companies on why they were able to succeed and why they are not able to reach this year their KPIs, and how what is the impact it will be on their own cost. So I think it's all this dialogue that is very, very important, and I fully agree with you with the complexity and the difficulties you have to get all the different type of actors around the table that don't speak necessarily the same language, that they don't understand each other. For example, we have been, if I'm going back to the agri macroinsurance services, we really have to explain, I mean, how you deal with insurance company. Because, I mean, dealing with the insurance company is different compared to if you deal with another type of actors. So it's all this that takes time, and that requires a lot of energy, and requires this capacity to put people together around the table and to try to find solutions.
For sure. Yeah, and I think it's important to note too that everything all of you have mentioned, from data and the complexity to the importance of patient capital and having a structure that's not just your normal working capital loan, is not Africa specific, right? There's usually a risk associated with investing in Africa just because it's there or because it's agriculture, but these are the same issues that the industry faces in the US and Europe as well. And so these are solutions that can be created here and even find value in other markets, which is important to note that risk premium that's sometimes attached is not really warranted. But in the last couple minutes, because we've discussed the complexities and the challenges for a good 40 minutes, I thought maybe we could end on a positive note, because you guys are all up here because you do believe in this sector, because you've seen its success either as an investor or as an actual corporation. So maybe going down the line, again, starting with Winford, we can say, okay, noting all these challenges and the solutions we've kind of come up with, from the complexities to the different types of patient capital, what makes you excited about investing in agriculture from an investor perspective and a returns perspective, and also from a climate impact perspective, right? Because that's why you're on this panel, right? The challenge is implied in kind of the title that we got, but you're here because you're excited and you saw an opportunity. So let's finish on that note, and maybe just tell me why, Winford, do you get excited about this sector and investing in this sector?
So for me, I'm quite excited about agriculture, and I'll call it climate smart agriculture, because it's just ensuring that the agriculture space has climate in it for the African continent, precisely because I feel as a continent, unlike other economies, we are not yet locked into pathways that are high carbon and that we cannot shift. So for me, I look at it as an advantage that we are having these conversations now. We are not yet locked in. We are still, most of us, developing. So if we were to just act after having these conversations, now actually go put all these people in a room, have the strategies laid out, and actually implement those strategies. And I was looking at it because, like the Fund for Resilience and Prosperity, it is a job creation fund. And at the design of the program, we looked at the continent. We are implementing in 20 countries in Africa. And we identified agribusiness and climate impact. So we are in agribusiness, climate impact, and digital economy. And these are the sectors we felt have the highest potential to give us dignified and fulfilling work for the youth. And that says a lot, because if we are seeing these sectors as sectors that can create jobs, it means they have the potential to grow. And because we are not locked into these high carbon pathways, we can actually lead in that front. Instead of looking at it as a disadvantage, lead in that front. And I'm excited to come back in the next 3-4 years, and hopefully we won't be having we'll be having a different set of challenges than what we discussed today. So I'm excited to just look at these as sectors that can help us grow, create jobs, catalyze enterprise growth, and just lead us to get to hopefully be developed countries at some point. Yeah.
I think from my perspective, we've talked about the great need. In a way, the parallel to need is great opportunity. And as a result, I think what I've been excited about is, even in our pipeline, a few years ago, 3 years ago, was a lot of energy deals, there was a lot of mobility deals. More and more now we're seeing agriculture, ag tech, because there's so much innovation that's actually happening. And we're seeing it across climate insurance, we're seeing it across everything from biofertilizer to fortified seeds or biostimulants fortified seeds. We're seeing innovations across soil organic carbon. Improvements in yields and market access and reduction in post-harvest losses. There's so much innovation and technology that is coming to bear, and I think that makes this an exciting space, because you do believe that you can do things better, faster, cheaper over time, and that will ultimately improve access and impact.
Now, we'll go almost the same thing. I think that what is very exciting is the potential, and the potential in terms of innovation, and the potential you have in terms of the fact that, you also know that you're going to serve, the people that are feeding you. And I think that, I think that we all are aiming at being better served in that field, and to see that all the challenges, I think that there's a kind of, I would say, moral responsibility to say that, we need to be sure that agriculture's we're going to develop in the futures will be properly for everyone, and that we do have this reality that we can do better things if we join force together. And that's why I like it as well, in the sense that, it's not only a solution that comes from one, but it comes from people together, and this capacity that we will have to do things, to think on the global spaces makes, I think, a lot of very exciting challenges.
I think we're at the coalface, so it's exciting that we can convert coal-generated power into renewable energy. We can take molasses, turn it into ethanol, and turn it into E10 fuel and put it in cars. We can save water by converting all of our irrigation systems to subsurface drip. So there's all sorts of things that we get excited about that we can do to improve the environment and where we're going.
Yeah, so I think for me the excitement is how livelihoods change. I think when homes, at least homes, not countries, at first homes become food secure. We had projects in the northern parts of Kenya. We tested our project in the most arid lands in Kenya, just to prove that it is possible to turn that around into food producing areas, because there's something about the soil structure and the water quality that can grow certain crops. And then to go back years later, because that was 4 years ago, and find babies who are starving now, they are chubby, they are happy, and they're in school because their mothers can afford, to pay school fees to a certain extent. So agri actually touches also a lot of humanity in different ways. Seeing shopping centers coming up in places which were just vacant and so arid and so desolate and destitute, So seeing a little buzz of economic activity starting to take place in those places, it just warms my heart so much, yeah? So thank you for being in the room. You're in the right area of interest.
Yeah, that's a great note to end on and right on time. So thank you all very much, and thank you all for listening. Have a great rest of the day.
Thank you.